Well, good morning, everyone, and welcome to the Minnesota Real Estate Show. Hope your weekend is starting off well. July the 20th, 2024, and this is the Minnesota Real Estate Show. We're live down at News Talk 830 WCCO every Saturday morning from 10 a.m. to 11 a.m. This is a real estate show hosted by Mike Overson of Luminate Home Loans, Scott Wolmering, and myself, Ryan O'Neill of the Minnesota Real Estate Team, RE/MAX Advantage Plus. Hope your weekend is starting off well. Wherever you're catching us on social media, we appreciate it. This is an interactive show. You can comment at any point, questions that you might have. Scott, good morning to you.
Yeah, good to be here. Appreciate everybody tuning in. Like Ryan said, this is an interactive show, which means we love your comments, love your feedback through the entire show. Like always, we're going to talk about what's going on in the current market, what we think is going to happen over the next 90 days here, and kind of how the year is going to wrap up.
Yeah, again, in studio today, Brad Sanford, Farmers Insurance. Thanks for being here, bud.
Good morning. I got some insurance updates for you and a little bit what's going on.
Yeah, all right, we're going live on air here. Thanks again, everybody, for joining us. Well, good morning and welcome to the Minnesota Real Estate Show. Thanks for joining us, everybody. July the 20th, 2024, and this is the Minnesota Real Estate Show hosted by Mike Overson of Luminate Home Loans, Scott Wolmering, and myself, Ryan O'Neill of the Minnesota Real Estate Team and RE/MAX Advantage Plus. Hope your weekend is starting off well. This is a local, live, and interactive show. We welcome your questions and comments at any point. 612-294-6949. Again, 612-294-6949 is how you can join the discussion at any point throughout the show. We are excited to have you joining us here today. And Scott, good morning to you, bud.
Yeah, good to be here. Appreciate everybody tuning in. Like Ryan said, this is the Minnesota Real Estate Show, and we are going to talk everything real estate and mortgage related. Crazy week in the political scene. We would be remiss if we didn't talk about it a little bit. Obviously, everybody's prayers goes out to the Trump family and the attempted assassination, which kind of put everybody in shock mode for this whole week. So everybody's fine, and obviously the gentleman that took the bullet for his family that is no longer with us, our prayers go with him as well.
Yeah, again, 612-294-6949 is how you can join us. First segment of the show, we always like to give an update from a real estate and a mortgage standpoint. Current numbers, current stats to help you, whether you're just a casual follower of real estate or you're actually looking to buy and sell, to give you a little more information to help make good decisions. So new listings this past week were down pretty significantly, 23% less new homes for sale that came onto the market. There were only 894 Yowzers. That's not good. Pending sales, pretty flat, almost even compared to last year. They were down just 1%, 823 pending sales. And then the inventory year over year is still up. It's at 8,954 homes for sale in the Twin Cities, but still historically low, very, very low. The other comment, Scott, is they talked about housing starts. Housing starts fell 5.5% month over month in a seasonally adjusted annual rate. So again, inventory is an issue. I know that sales-wise, we're up maybe about 10% in more deals, but Scott, a lot of inventory issues.
Yeah, it is. I mean, when you hear that number, you're like, man, 7,800 homes, everything should be selling in 2 seconds with 20 offers on it. Well, that's not what's happening. It's my opinion that we're kind of in our second year of this kind of ick. We don't like what we're buying. We don't like what it costs. We definitely don't like the interest rates, and we don't like our payment. And I think that we're starting now. I think this is probably the third or fourth show in a row where we've been down in pendings. We've been down a little bit with new listings coming on, and it's kind of just a slow creep, but you can feel it out there. Like one example, in a city where I have a listing, 900 searches on it. Normally that would be 25 or 30 showings, and normally that would be 3 to 5 offers on it. We've been on for a little over a couple weeks. We've had 2 showings on it, and that's what's out there right now. That's where we're in. People can feel it. They're not really even sure why they're not out there in droves. They're just not.
Yeah, and I think again, the COVID time period of real estate was so unusual, and especially for agents that started during that time, that then now they're saying, well, hey, what's going on? It's actually taken 30 days for a house to sell, or 60 or 90. And it's just becoming a little bit more normal. Everyone has taken a deep breath, and it's become a little bit more normal. Mortgage rates, Mike Overson, Illuminate Home Loans, he's going to be joining us here in just a little bit. But the 30-year fixed rate mortgage fell to its lowest level since mid-March. Mike shared an email with the team yesterday that it's now 6.81 for a 30-year fixed rate, which is really encouraging. It's encouraging to see that. And, Mike sharing that good news, interest rates dropping, that's positive from your end.
Yeah. So, that 6.81% is the average, right? That's the average 30-year fix. That means people are below that, depending on your credit score and down payment, things like that, and some are above. But in general, we've seen over the last about 3-4 weeks, just the slow drop of an interest rates. And, we're anywhere between basically like 6.125 on a VA up to, probably 6.875, 6.75 or so on a standard conventional for top tier credit. So, it's the nice thing too is it's held here for like 3 weeks. That's the other thing. Before we touch it, we'd be there for a week and we go back up, right? So now we are here for 3 weeks. Looks like it's going to continue. So now we have some stability, with these interest rates.
So who should buy? I mean, I was actually just talking about that with a couple agents. In my opinion, who should buy right now is anyone that can buy. Because here's what's going to happen. If rates do drop into the 5s, and this isn't national, you don't have to, it's not just the Twin Cities, it's like 9 million buyers all of a sudden become active. Now they can buy what they want to buy. Now maybe they buy what they like what they're buying because of what their interest rate will allow them to do. And so the flip side of that is you don't buy and you wait for rates to drop into the 5s. If you're buying 600 right now, my argument is you're buying 630. If you're buying 700, you're buying 750, because when rates go down, prices go up.
One note, I had an interesting discussion this week with a team member on the Minnesota real estate team about an active listing that she has. And this listing has had probably 10 showings, and all the feedback from the agents has been that the property is overpriced. And
If I was just going to interrupt you, if you actually get an overpriced feedback in Minnesota, you are overpriced.
Yes.
Because this is Minnesota nice. Very few people say you're overpriced.
Yeah, so what's interesting about it, and I think what the seller in this case is really struggling with, is they're still challenging the feedback. They're challenging the feedback. No, that's not the case. And it's one of those things that if you're getting showings and you're not getting offers, price is number one on the list. Even if, to Scott's point, even if you're not getting that feedback. And so if you're, sellers that are out there, if it's not selling immediately, don't freak out. The world's just becoming a little more normal with real estate.
Yeah, it is. It's hard for sellers because sellers always have a value in their head. They always believe that they know what their home is worth. And a lot of times that's just because the neighbor talk and they saw their neighbor's house sell, and they don't understand that their neighbor's house was a rambler and they're a split level. And so of course that changes. So everybody comes in with an idea of what their home's worth. But like Ryan said, and I can tell you this for a fact, if you are actually getting hey, you're overpriced feedback, you are way overpriced. Because I've had them where I know we're overpriced, and maybe 1 in 10 will actually say you're overpriced. Most people would say, oh, it's great, it's a super house. Oh, you can tell one owner's lived here. Everybody's polite, but they're not writing on your house. It's overpriced.
Yeah, again, 612-294-6949. This is the Minnesota Real Estate Show. We are a local real estate team. We help people buy homes, sell homes, invest in real estate. Wherever you're hearing this in Minnesota or Western Wisconsin, We've got a top agent on our team that would love to work with you and your family. We'll be back after the break. Thanks for joining us on social media. A lot of nice comments. Good morning to Mark DePonte, fellow agent, broker, outstanding. Bill Ebert, good morning, Bill. Jen, good morning, Jen. Jennifer Donne, nice to see you. Mike, you came in perfect timing there, right?
Yeah.
right on your segment.
I was listening to you guys on the elevator up here, so I knew what you were talking about before I got to here. Yeah.
Brad, thanks for being here, bud. Brad Sanford, Farmers Insurance, one of our longtime partners on the show. We had a nice request come in this week from a pretty serious real estate investor, owns a lot of properties. They were looking for a quote from you, Brad.
Yeah, very nice guy, very nice people. My experience as a business banker and my experience as a bank manager really helps out when you're doing those types of deals because you understand all the things that it takes to give them the comprehensive coverage they're looking for.
One thing that happened this week, guys, that I wanted to talk about with everybody is townhome insurance and the problems that it's causing for sales on townhomes. And I've been emailing with Mike about this, these HO6 policies. Mike, tell people, what is an HO6 policy?
Well,
sorry. yeah.
Brad,
sorry.
Listen to Mike.
No.
Mike.
So it's
No, I was just thinking because we were emailing on this. Sorry, Brad.
Thanks, guys. See you
Yeah,
later.
thanks, Brad. Yeah, thank you, Brad. Mike and Brad.
Typically, it's not the HO6 policy. It's the master insurance policy of the association that causes the issue. And then,
Help us explain that though.
so insurance costs have gone up. Minnesota has been, we got to be towards the top of states where insurance has gone up probably the most, right?
Yeah,
if you look for the last 18, 24 months, something like that. So what associations will do is they will crank their deductible up to bring their premium down so that they don't have this high insurance premium to pay. Well, the problem is that all these loan programs require that the master association policy has a deductible capped at a certain level, typically 5%. Well, all these associations are 8 and 10% on there so they can bring their premium down. So that causes the issue. So now on the home buyer side of things, they get a personal policy called an HO6 policy. And then HO6 policy can help kind of offset the deductible over here, but in some cases it's impossible to do.
And what that's called is a loss assessment. And so if they raise their deductible, if the condo association raised their deductible, they need all their people living inside condo owners to raise, or townhome owners to raise their loss assessment to meet that number.
And so what's the, so where is it that the lender won't lend on it?
I'll give you an example.
Yeah.
So in this case, our seller is trying to sell the property. The buyer has gotten denied by multiple local lenders that they can't get coverage in the amount of a certain dollar amount. So literally, it could blow up the whole deal. Our seller is super frantic. They're like, "What do you mean? Why can we not sell?" So we'll continue the discussion here. But thanks for joining us on social media. We're going live on CCO. Top of the morning to you from a local Irishman here. We appreciate you tuning in to the Minnesota Real Estate Show. We're here every Saturday, 10 to 11, talking real estate, mortgage, insurance, and here to provide you and your families, friends, good information when you're looking to buy, sell, invest in real estate. Again, talking a little bit during the break about insurance issues for those living in townhomes. Have a seller that we are helping, that the buyer who has an accepted offer on their home, okay, accepted purchase agreement, supposed to close, they are unable to get insurance in the amount that the homeowners association is requesting, guys, for an HO6 policy. This could blow up the whole deal. We've had multiple lenders look at it. Unfortunately, Luminate, we don't represent the buyer, so Luminate's not on the buy side. But guys, any other thoughts to share with our CCO listeners specifically about that?
Yeah, so we've seen this. This is a problem that's come up more and more, and it's on the radar. So what happens is Fannie Mae and Freddie Mac and FHA, the people that make all the rules around loans, right? what happened is they took enough of these properties back, whether it's a condo, whether it's townhouses, to where they had to take them back. There was damage that was done to the property. The insurance coverage of the master policy from the association didn't cover that. So now they got to stick money into it to unload it. You have that happen enough times, they're like, all right, time out. We're going to change our rules, and we're going to do this so that if we end up taking any of these properties back, we don't have to stick all this money into them to sell them and get them off our books. And so that's what started all of this. And so then with insurance costs rising, across the country, associations, the way they're saving money is they're cranking their deductibles up,
Yeah.
right? Let's take a higher deductible instead of a 5% deductible. Let's do like 8 or 10%.
So then our monthly association payment's not so high.
Yeah, then we don't have to crank the association dues up on all of our people and things like that. Well, the offset there is that now that higher deductible is not meeting the loan guidelines. And so now the loan's saying, your deductible's too high. We're not going to lend on that one. And so now you get the headbutting of, well, we're trying to keep our insurance premiums down. It's like, well, but you got to have adequate insurance there, and you're at a stalemate kind of.
Well, yeah, and if you're out there listening right now saying, oh, this must be a unique thing that doesn't happen a lot, it's happening a lot. Agent on my team had the same thing happen a few months ago. It's one of those things that you don't know about it. So, you sell your townhome, everybody's fine. Then you get a call. Hey, we've got a problem with this HO6 thing. And I guarantee you the answer is, what's an HO6?
Right.
Brad, insurance, good timing. Having on Brad Sanford, Farmers Insurance.
And what we're talking about is master policy covers the roof, the siding, rebuilding the shell. And those policies come from large companies, and those large companies, they're compressing. There's a lot less large companies that want to insure associations because of the problems that you guys are talking about. And for the last year and a half, I've had a lot of customers come to me and say, my association sent me this letter. They want me to do this for a loss assessment and for building property, which means building out the inside, which is what a HO6 does, right? It builds off from the studs in.
Yeah.
They want me to raise the dollar amount to a certain amount. And that has been going on for a long time. And they've been increasing them from 15,000 to, I've seen 50,000, but 25,000 seems to be the number.
Yeah, again, just something to be aware of. If you are living in an association, it's super important, again, to have a really good real estate agent on the buying side and on the listing side who can help guide you through this process. Because in this case, it can be a challenge. It's definitely a challenge, but having a really good agent, super important. It's one of the jobs that a good real estate agent is going to do for you, both on the buying and listing side, guys.
One thing I will say is that no matter how good your agent is, no matter how good your loan officer is, it's almost impossible to be able to predict if this type of issue is going to come up until you get far enough into it.
That's the problem.
There's a lot of information that needs to be obtained by the lender. So there's a 7-page homeowners association questionnaire form that needs to get filled out. And then we need meeting minutes from the last 3 months of the association board meetings. And we need all this stuff. It's impossible to be able to predict up front if we're going to run into this issue or not. So you will get 2 to 3 weeks into this thing before this issue might surface, and then now you got to deal with it.
So the question comes up from all the real estate agents listening, because it's running through my head, is that a conversation that you have with your seller? I'll give you my point of view, and I think we're going to be different on this. So my point of view has always been, I don't have people ride a roller coaster unless they need to ride the roller coaster. And since we're going to know our information in a couple weeks, not 2 weeks outside of closing, I would probably roll with not having the seller freak out until I have information. Brian, you're going to disagree with that.
No, you know what? I used to work 2 summers at the High Roller.
At the Valley Fair.
Valley Fair. Welcome to the High Roller. Please step through the turnstile and walk all the way to the front of the
Oh
station.
my God.
You want to talk about appreciating hard work? And I don't know. It's Valley Fair for those that work there. I work the rides department. And it was, 65 hours a week. And you had the high roller, the tilt-a-whirl, the flying trapeze, Tot Town. But when you're out there in that hot weather, for all of our landscaper friends, people doing construction, that hot weather, anybody out, man, that is brutal, guys.
Yeah, it is. And everybody listening right now that either knows you or doesn't know you, just listening on the radio, are going, of course he worked at Valley Fair. You can see him in the little vest such a good personality. So excited, folks, that you're writing the. It's so true.
It is Valley Fair. It was a good job. Good job. I think it was like $6.25 an hour, if I remember right. It was $6.25 an hour. And it was like 60 hours a week. But you made a lot of good buddies from that. I don't even know how we got.
I don't even know what we were talking about. We were talking about associations and yes,
High rollers.
high
Oh,
rollers, yes.
if you put people on the roller coaster, I do agree with Scott. The interesting thing about this is that the sellers work with a larger property management company. Okay, well known. I'm not going to say who it is. We don't want to throw them under the bus. But in contacting their community manager or their property manager, they work for the board of the association. So I wrote a very polite email, a Ryan email to the because she would not give us the information of the board members. I said, if I was a board member, I would want to know what's happening to the dues paying members of our community. And she would not give me, said, look, we don't provide you the board members' names. I can tell you again, I'm on an association board. I get a lot of calls and emails from dues paying members because that's partly my job. So that's part of the frustration, I think, guys, is that we're not able to get answers from anyone. And these sellers may not be able to sell their townhome.
Yes. At the end of the day, that's the main thing.
Yeah.
So we've experienced the same thing. Some will give up the information. Sometimes the sellers will give us information because we're like, you got buyer and seller trying to get this done, work together to get the information needed, and the management company doesn't provide us the info we need. And so then I get both agents on an email to say, hey, look, here's what we need. We've attempted 3 times for this management company to get this information to us, and we've been unsuccessful. Can you give us the contact information for the president of the HOA? And the seller or listing agent, a lot of times, will kick it over. We'll reach out to that person. Maybe they can help us, maybe they can't, but at least we can get that information. A lot of times it comes right from the seller.
Yeah, I appreciate you joining us. A lot of people online too on social media. Thank you for joining us. We welcome your questions, comments, thoughts at any point. 612-294-6949. If you also worked at Valley Fair, join us. Join us. Brad Sanford. Brad, what do you think of all this insurance talk here, bud?
Well, you're taking my what I was going to say today, is that insurance carriers have lost money in Minnesota 6 out of the last 7 years.
Yeah.
The storm last August that was caused by hail, how much have carriers paid out for that storm? How much do you think? Guess the number.
Just in Minnesota?
Yep. My wife last night guessed 20 million.
I was going to say 400 million.
68 million.
I'm going high. I'll do 500 million.
$1.1 billion.
Wow.
Okay.
So that's why insurance companies are leading. That's why these associations are having trouble getting coverage. Insurance companies are not going to take those hits with the smaller premiums that they're getting. It's just not they have a composite score of how much they're paying out. And if you're over 100, that means that you are paying out more than you're taking in. And a lot of carriers are seeing that, and they're just walking away from Minnesota. So that's the problem we have.
Yeah, again, we're up against the halfway point here at the Minnesota Real Estate Show. Before the break, Kieran Houlihan, who is from Australia. Wonderful guy. He's got a listing in Roseville, 964 Lydia Drive in Roseville, $549,900. And Kieran says location, size, and condition make this home a must-see. It's a sought-after area. It's located between Lake Josephine and Lake Owasso in Roseville again. It's a 2-story, oversized bungalow-style residence that has expansive living spaces throughout, 7 bedrooms, 4 bathrooms, a workshop, heated garage, 281 finished square feet. He's got an open house today, 12:30 to 2, right after the show, and Sunday, 12 to 1:30. Be sure to check out those pictures, 964 Lydia Drive West in Roseville for $549,900. This is the Minnesota Real Estate Show. That's a nice one, guys.
7 bedrooms.
So, I know, 7 bedrooms. Do you see many 7 bedrooms, Scott?
That's your
No,
Who,
I don't see many 7 bedrooms. Whenever I hear that, I always think, if you've ever noticed, if you've been at a like a cocktail party or whatever, and somehow real estate comes up, and if you say, if you ask somebody, well, how large is your house? They will always say the bedrooms.
Really?
Yeah. So if you say, well, how large is it? Oh, we're in a 6-bedroom. We're in a 5-bedroom. Well, you could have 1,000 square foot house with 5 bedrooms. So, you know what I mean? But that's how people answer it all the time. Oh, we have 5 bedrooms, or we have 6 bedrooms. 7 bedrooms, we'll see that a lot.
7's a big house.
It's a big house.
Brad, you thinking of buying a 7-bedroom?
I am not. No, I love the 4-bedroom that we're in.
Hey, I was thinking about the insurance deal and just scenarios that run in my brain. If you're the selling agent, listing agent, and you know there's a possibility, and you don't, so you want to be proactive to find out if you're going to run into an issue, because time is a killer in real estate. So if you have a buyer that comes in, they're through their inspection, now they find out there's an issue with the HO6, and they don't want to mess with it. They don't want to dig around with it, so they leave. That person leaving and the black flag that it leaves on your listing and what you're going to get for
clouds.
the cloud is what really hurts. So same reason you want to be proactive and make sure that you're not going to have any issues out of the inspection. This is another one, because 3 weeks on the market and it falls apart. Well, what happened? People don't know. They figure, they conjecture. Want to avoid that.
One thing I would say though, to Luminate, again, Luminate is a local bank. And that helps a lot, because in this case, the 2 lenders that denied them are both national banks.
Big box.
Yeah, big box lenders. Well, what Mike brought up in this case is a good example, is you could go with, for example, Luminate, a local bank, where they have it as a portfolio loan. They keep it in-house and they're not selling it to Fannie and Freddie.
Yeah, so that's the nice thing about portfolio loans, is because we're not selling it to a third party, it's gonna stay on our books. We get to make the rules, right? So it's like, all right, so we look at this borrower, it's like, they're great credit scores, they got 30% down, they got reserves in the bank, they got all this stuff going on. The only reason why they're not getting a loan is because Fannie and Freddie made this rule around insurance. If we're like, you know what, we'll bet on the jockey versus the horse here because our jockey is super, super strong, then we'll do a portfolio loan for them, get them to that place, and you're good to go.
Yeah, it reminds me of what we were talking about. Just another qualifying thing that's going to start popping up.
Yeah,
is we're going to be doing a listing. I won't tell you the address yet, but a big property on over 60 acres. And
how many bedrooms?
Yeah, it's 1,200 square feet. It's got 8 bedrooms.
Those are closets.
Those are closets.
That's right.
We got 8 bedrooms in it.
Yeah, and what was we talking about?
We were talking
Your
about
big listing.
Oh, the big listing. And,
Big listing.
and the
Actually, we're up against the break.
yeah, exactly.
No, I'm kidding.
But the fact that it's a barn dominium is the main structure of the house.
All barndominium
And I've not run into that. So you can't get financing on that unless you have comps. Well, there's no comps
on barndominium.
on barndominiums. And that's gonna start popping up because they're getting pretty strong in Wisconsin.
Scott,
So I
sorry.
could talk about that when we
Yeah,
come back
yeah.
on air here too, about how that works. Wisconsin, not a
No
problem.
problem.
We got comps.
Yeah.
We've done in Wisconsin.
Barndominium.
Stand them 30-year Fannie, Freddie, 30-year stuff because you got comps.
Can you insure a barndominium?
Sure.
Absolutely.
Okay.
Yeah, they don't got basements. Insure those all day long. And a lot of them are commercial construction, so they're not going anywhere.
Did any of you guys work at Valley Fair?
No, I didn't. I did not. I tried. I failed during
You didn't get hired.
The vetting process.
Scott didn't get hired. That's okay though. We'll talk about that a little bit. We're going live on CCO. Appreciate you joining us on social media. Hope you're enjoying the show. If you have questions, comments, thoughts, anything you want us to talk about, don't hesitate to comment on the stream too. Here we go. We're going back live on air. Thank you. Hey, welcome back to CCO and the Minnesota Real Estate Show. We do appreciate you joining us every Saturday, 10 a.m. to 11 a.m. Got one other new listing. This one's got a 1 in front of it, 169,000. It's in Coon Rapids, 1900 Coon Rapids Boulevard Northwest, number 1. And this is a 1-bedroom, 1 bath, 624 square foot property. Kurt Carlson with the Minnesota Real Estate Team and Remax Advantage Plus has this listed. He said this fully renovated condo has a private entrance right next to the 2 assigned parking spots. The range, fridge, furnace are newer, fresh paint, carpet, all new flooring, new interior doors and hardware. Full renovation ready for you to move in and enjoy. This condo is on the back side of the building with a large green space for the backyard. 1 bedroom and 1 bathroom for this property in Coon Rapids, 1900 Coon Rapids Boulevard Northwest, number 1. Mike, what do you think of that, buddy?
I'm wondering if they're going to start listing condos. Part of the listing will be like, this association only has a 5% deductible, or something.
Yeah.
Right.
Yeah, I mean, you got to give a heads up because it is, well, it's not fair for the seller and obviously the buyer. They don't know what's coming, and all of a sudden the whole thing blows up. So there's got to be a way to be proactive to understand what you're dealing with. But like you said, until that form goes out and is filled out, you really don't.
Yeah, and this is an active, like there's a lot happening right now on the backside of these things to change the guidelines and make financing a little bit easier. So these new rules that Fannie and Freddie put into place, they actually went into place last, it was either August or September of last year. It's been on the radar. So they realize it's becoming a problem, and it's kind of a problem right now, and they're trying to address that to see if they can change these rules. But until they change them, this is the world we're going to live in for a little bit.
Hey, wanted to touch on, we've got some changes coming to the real estate world as of August 1st. There was the big lawsuit about commissions. And the question a lot of people have is, hey, what's going on? What's the latest? So the Minnesota Association of Realtors, we've got a group of new forms, some new forms that are coming out for all of the agents to be using with buyers and sellers. So if you are buying or selling a property moving forward, a couple things that are different. The first thing is if you're meeting an agent for the first time at a property, you've never met them, the agent is required to fill out a representation agreement with that customer. Even though you're meeting them for the first time, you could do an exclusive representation, which means that you're working solely with that broker. You could do what's called a non-exclusive agreement as well, which doesn't obligate you to them. But that was one big part of the lawsuit, guys, is the buyer on the buyer side, Scott.
Yeah, and so it's one of these things that, well, whatever. I mean, okay. So everybody listening on the radio right now, you walk into my open house and you say, "Oh my God, I love this house," and I say, "Mr. and Mrs. Buyer, please stop. I need to have you sign this document that it's not going to happen. It's not going to happen." So people they're going to police it. But there's no way in the world that if you walk into my open house or I meet you to show a house for the first time, before we walk in the house, that I'm going to have you sign a document. I mean, it's what we're required to do. So I'm saying right now I'm going to do it, but it's not going to be done.
Yeah, it is, and that's part of it. So on the buy side, guys, Mike, you had a thought about that on the buyer side?
Well, so if someone comes in, and let's say it's myself, right? I've been in the business. I'm not a licensed agent, but I've been doing this for 20 years. I'm pretty comfortable buying not having an agent to go buy a house. If I go into an open house that you have, Scott, let's say I don't know you, it's an open house. I go walk in there and we start talking about this, and you say, "Hey, the law says I got to have you sign this form." I'm like, I'm not going to have a.
So Scott represents the seller.
I represent the seller.
So you don't represent the buyer.
Nope.
You're not showing it. Yep. Scott is representing the seller.
That's right.
So they can come in.
Mike comes in unrepresented. I represent the seller.
Okay. So if we start talking about this stuff,
Fine.
at that point, do you have to put this form in front of my?
No,
face?
I represent the seller.
Okay.
I don't represent you.
Okay.
The understanding of that now with this new rule is on you. So you need to understand as a consumer that I represent the seller.
Yeah, so the idea is you go on to remax.com or mnrealestateteam.com, and I'm going to go see this house at 9001 James Avenue. You meet an agent there for the first time. That agent is required then, in that case, because they're helping the buyer, to fill out this document. Exclusive, non-exclusive is an option. It's a way to just help people understand, Mike and Brad.
Well, I'm not an agent, but I did sleep at a Best Western last night. So, so taking this all in, so if my wife and I, we go look at 5 different properties and we don't look at it with the same realtor, we could have 5 agreements out there?
It could be, well, again, if you sign an exclusive, then you're working with that broker. It's not set for the agent. In other words, maybe you sign an agreement with Scott with Remax Advantage Plus. The agreement is not with Scott, it's with the brokerage. So if that's an exclusive, then you can't sign another exclusive with a new agent.
Yeah.
Okay. But if it's a non-exclusive, maybe it's specific to that property, you're not obligated to work with Scott and the brokerage.
Okay, that answered my question, because I thought, what if Mike finds me a property But you also find me a property, and I've signed with both of you guys that you guys could look for me. Maybe not just for that property, but you take it and you take the initiative, you go find something else.
What do you think of that, Scott?
Yeah, I mean, well, I've been pretty vocal on this whole thing. So
Are we up against a break?
Yeah, I was gonna say, for those that have not tracked this lawsuit, the bottom line is it's sellers used to, I should say, brokers used to agree to split their commission with
Cooperate.
with a cooperating brokerage. So Ryan works for Edina, I work for Remax Advantage Plus. I list your home. Ryan brings in a buyer. I agree to split my commission and pay that. That's how it's always been. Now, I would go out there on a limb and say, I don't think I've ever had a seller that I've listed their house that did not know what commission they were paying. But that is basically the lawsuit. And so the problem with it comes in, well, great, I'm a seller. Now I don't have to pay 6%. I can just pay 3%. I don't have to pay out the buyer side.
Yes.
Well, that makes sense on paper. The problem is it's like any other market. When you shrink your buyers, so let's say, for example, there's going to be now 25% of all offers are going to be non-represented buyers. You know, if we went on that.
Sure.
So you've eliminated 25 or you've eliminated 50% that want to be represented by an agent that are now not going to show your property because you're not paying out. And so the same discussion that I had 20 years ago is happening now. Mr. and Mrs. Seller, you can pay 3%. Do we want to offer a buyer rep? Here are the reasons why. Here's why it's important. And they make that decision. Nothing has changed.
Yeah, so just so people understand, if you sit down with an agent and you say, look, I would like to pay out just the listing agent, the listing broker for say 3% or 3.3 or whatever that number is, you can do that. You can make that decision to say, I am not going to be paying a buyer's broker. You can also make the decision to pay the buyer broker directly. Okay, and then the last piece is in the purchase agreement. So here's the change is, let's just say Scott has a listing in Bloomington and I call Scott and your seller is not paying out a buyer's commission. Well, I will have a buyer representation document with my buyer. So the buyer could pay the commission, but in the purchase agreement now, there's a spot that says the seller will agree to pay whatever the number is we put in the purchase agreement for that commission. And let's say it's 2%, 1%, 2.7. Then in that case, we present the offer to Scott. So now Scott's seller is saying, wait, I agreed to 3.3. Now they're writing in 2.7 here. What do we do here? And so it's a little bit different, but I think Scott's point is, and maybe Mike, we can talk about this, is our buyers going to have extra funds? If Scott's seller says, no, we're not paying you, are they going to have extra funds? And if that buyer wants to be represented, are they going to lose the buyer? And that situation, by the way, just happened to an agent on our team. David Meyer had this exact situation. And the following day, the seller came back
Yes.
and said, you know what, we will pay you a commission now. And by that point, actually, the buyer had moved on to another property. So it's interesting how it shook up.
And that's what's going to be happening. And that's the concern I want people to understand. If you are a seller, there is no way that you can make up the gap of losing 30% of the people showing your house to make up that gap of 2.7% or 2% or whatever it is. So on a $400,000 house, you're talking about $8,000. If you think that having another 30% of the buyers look at your home is not going to make up $8,000, you're just crazy. And so that's the problem. All that's happened here is bureaucracy. We've added more forms and a different way to have the same exact money that's been there forever. I mean, that's what's happening.
And just remember, as a consumer, it's going to give you options. So your agent, your top agent, should be sitting down with you and talking with you about how this now works, how it now works, so you as the consumer can make the decision. That's what the lawsuit was about, and that's how it's going to be moving forward. We're up against our third break. Brad Sanford, Farmers Insurance, is like, why did I come on here today? Man, we're talking about the high roller commissions, and Mike Overson as well. We'll be back after the break. Brad, what do you think about this? As you're a consumer, you're hearing this. What are your thoughts as you hear about this?
You know, we talked about this a month ago.
Is it confusing?
No, it was just, I think it like Scott's, I'm in Scott's point of view, it's dumb. You know, you guys, it's dumb to you guys because you guys are great realtors, right? You tell everybody everything. There are people out there that don't represent people very well, that aren't good realtors, that this is the problem.
And the other thing too is the state of Minnesota has been very forefront on disclosure. You go to Utah,
Yeah.
they're freaking out down there because
Oh, they're thieves.
They-
People in Utah, they're horrible.
no one. Well,
You're terrible.
They didn't
It's
have,
terrible.
They didn't have the same forms, the same laws, the same disclosure stuff down there. It's all brand new.
Yeah, buyer broker.
You know what I
buyer
mean?
Agency.
Like,
Yeah, I mean, Eric Malberg,
Yeah.
the fearless leader of Advantage Plus, talking about being proactive. This form of, hey, Mrs. Seller, here's how the commission works. We've been using for 10 years.
Sure.
So I'm like, there's no different.
That-
My seller 10 years ago could say, Scott, I am not paying out a buyer I'm not paying out a buyer commission. Hey, Mr. Mrs. Seller, that's your decision. They've always had that decision.
Yeah, one other thought for just a big picture for everybody watching is on the MLS, it won't show that commission. So that's the other big part of the change with this. So we could see that as agents now. Now we won't see it. So again, if Scott's got a listing, Brad, you become an agent, you got a listing, and I call Brad and say, hey, Brad, saw your nice listing in Roseville. Are you cooperating? Is there a buyer broker commission? And again, there's a new form for that cooperation form that will be included with the offer itself. So it is.
Well, and
Yeah.
as we know, agents are really good about answering the phone and answering questions. So as agents bombard you with whether you are offering a cooperating broker, it'll be cool because our industry they'll be gracious and they'll call back and let these people know. That's going to be the nightmare. I mean, people are going to be like, I've left this agent 5 messages.
Yeah,
He hasn't
Heather.
called me back. I don't know if they're paying or not.
Jennifer, thank you. She says, great information as always, guys. Very kind of you. We appreciate it. Joe Tremonti, the best team in the business. Thank you, Joe. Very gracious of you as well. You talked to Joe, or you saw Joe recently.
Yeah, we're actually putting Joe's house on, which I'll be talking about next week on air.
Awesome.
In Burnsville. I won't give you the big scoop, but awesome lot, 5-bedroom, 3-bath, about 400 grand in Burnsville. It's a great property. I'll be gone and I'll go over next week.
Awesome. Brad.
So if I become a big realtor and I offer to buy your home, does this affect that at all? Because I'm the selling agent, but then I'm also buying it. Do I?
So there's those guaranteed sale programs out there that different companies offer. It would impact it, from a representation standpoint. Again, if you're calling in that person, they would need to go over buyer agency with you. They would need to talk to you about being a buyer broker to help purchase. So it's
Wow.
Yeah, it's going to be,
Mess.
it's going to be a mess. It's going to be a learning curve mess, and agents hate change. I mean, out of any industry, I think real estate agents hate change more than any other industry, and we're about to have, it's going to just be a pain. I mean, that's what we're dealing with. I don't think it's going to change anything. I think the discussion changes a little bit at the table, but
it's just a different road and you're going to end up in the same
That's
spot
right,
at the end
that's
is what it is. You're getting detoured, you know what I mean? So you got to do a couple extra zigzags to get to where you're going to go. But at the end of the day, especially in Minnesota, because we've been operating like this for
That's
2
right.
years, you're going to end up at the same spot.
So Mike, we're going to talk, we're going to go live on air. I wanted to hit this, and also Brad in the last segment. Lending, how is this going to work for lending? Maybe just to hit that big picture for people, because I've had a lot of questions about that with the commissions. Here we go. We're going back live on air. Thanks for joining us, WCCO. Welcome back to the Minnesota, not the high roller, and to the Minnesota Real Estate Show. We do appreciate you joining us. We've been talking about the new commission deal. How's this going to work? Mike, lending, give us the scoop lending wise. Right now, you can do seller paid closing costs, for example, depending upon the loan. How is this going to work for commissions?
Yep. So each loan program out there has a cap of how much the seller can give the buyer a concession for typically closing costs, right? Let's say we're doing a conventional loan with 5% down. So that's what the buyer is. Conventional loan buyer, 5% down. The loan caps the seller at 3%. So 3% of the purchase price can go back to the buyer to help pay for closing costs and this and that. So what happens now if you make an offer on a house, 5% down conventional, and you're asking the seller to pay 3% closing costs, but the seller is not paying out a buyer's agent commissions. So now can you ask them to pay out an additional 2.7% so I can pay my buyer's commission?
Yep.
So a total of 5.7% is what you're getting back, but the loan only allows 3%. Every loan program so far, the VA is an outlier. There's one thing that they're working through yet. But if you're talking about conventional loans, FHA loans, they are not mixing seller concessions and buyer commissions, meaning that you can get 3% from the seller to pay your closing costs, and you can get 2.7 from the seller to help pay your buyer's commissions.
Hey, last segment here, Brad Sanford, Farmers Insurance. We've been talking so much about all this other stuff. What is cooking with you, my friend? I want to hear what's new. What do you have for CCO listeners?
Well, for all of these changes that are going on, all the forms and all that, all you have to send your clients to Brad Sanford, Farmers Agent, 651-690-2076. Send me all of your clients because we'll take care of them. Insurance, though, you've seen a 20% increase over the last year and a half. The predictions are you're going to see another 6% in 2025. After that, it's anybody's guess. What I've been seeing in the last 3 months is I've been seeing that Farmers is lowering people's rates. They're bringing down their insurance costs. So that's a positive. The companies that are here to stay, they raised your rates, but they are here to stay. So you don't want to get caught in one of those companies that might leave and, they didn't raise your rates, that kind of thing. So
Anything else for buyers, sellers, current owners should be aware of regarding insurance in this current marketplace here right now?
you guys bring up a great point. If you own a condo or a townhome, call your agent, check on your loss assessment amount, see how much you have, check on your building property amount, because that's the amount that it takes to rebuild the inside, sheetrock and all that stuff. And check and see what your numbers are. Make sure that it meshes with your association. You don't want to get caught.
Yeah, I could speak from a personal experience. I've recommended friends, family, a colleague to Brad Sanford, Farmers Insurance. Has been extremely helpful, awesome customer service. And you've even had a couple deals where you didn't even make anything on it, but you helped them out, got them to where they need. So I appreciate that about you, Brad. That's why you do so well.
And that's why I'm part of the Minnesota real estate team.
Yeah.
So
yeah, we're grateful for you. And I know you guys are thinking about Valley Fair or going to Valley Fair, right?
I'm trying to think last time I went to Valley Fair. I'll tell you, and older people know this, I'm in my 50s. I cannot do the tilt-a-whirl, anything that spins. I can still do roller coasters, but I can't do spinning rides.
Yeah, spinning rides. The Gravitron is the one that spins you backwards.
Yeah, no.
And it starts like this and then it goes and there's no
Not
way.
doing that.
everybody in my family knows spinny, no, up and down, okay.
Okay, yes.
Well, again, I did work the tilt-a-whirl a couple summers, and I'll tell you, that was pretty brutal. It's like nobody seemed to really enjoy the ride. They got on it thinking, okay, but the tilt-a-whirl, it's like,
it's horrible.
Yeah, and
It spins
yeah,
and spins.
you're
and spins.
just, so anyway, as we move forward in this market, again, if you're buying, selling, investing, you have questions, be sure to reach out to your agent. Talk about these new changes, the new paperwork, the new commissions. How's it going to work with lending? We, of course, would be honored to work with you. If you have questions, 612-294-6949. And from a lending standpoint, again, fellow agents out there, there's a reason we partner with Mike Overson and Luminate Home Loans. This example for this townhome problem, the buyer's agent, who's with another company, could have solved this one very easily had they been working with Luminate, because Luminate is also a local bank. And the bank could have stepped in to do a portfolio loan and allow their buyer to buy it. So there's reasons we work with you, Mike.
Yeah, it's one of those things that the reason why we did the whole bank thing is for situations like this. And you'll see that it'll become more common that people will kind of go to a local bank on this, because this hurdle's going to be there for a little while. It's not going to go away overnight.
Yeah, one thing we should mention, we don't mention a lot, that we actually do sell real estate for a living. I know that you listen to the show and you're like, my God, these guys are so eloquent, so well spoken. I wonder what they do.
Well, especially you.
Yeah, so absolutely.
Yes.
But we do sell real estate for a living, obviously, and we would love to help you or your family or your friends. So if you've not reached out to us before, 612-294-6949, or mnrealestateshow.com and let us know how we can help.
Brad, last thoughts as we head home?
You know, you have a golf tournament coming up here August 1st, and my foursome is challenging yours that we think we're going to do better than you.
Hey, thank you for bringing that up. The O'Neill Foundation of Hope. It is a foundation that our family started to help people in our community who are struggling. We help one family or individual each week financially, whether it's regarding rent, mortgage, mobility issues, food scarcity, you name it. We're doing a fundraiser charity golf event August 1st. Again, if you just go to o'neillhope.org, there's a little bit more information on that. You can find it on Facebook as well. You're golfing, Scott.
Yep, we got a foursome. We'll be there. It's a fun event every year. And last year, the recipient was, I forgot his name.
Kyle.
Kyle, yes, a great man. Lou Gehrig's disease, horrible disease.
Yep, a young man who has ALS, helped him with a new wheelchair. And so check that out again. It's August 1st. Would love to have listeners join us. It's golf, even if you don't golf. It's fun, it's low pressure, and it's coming up August 1st here right in the Twin Cities. Again, o'neillhope.org. Thanks for joining the Minnesota Real Estate Show. It's been a fun one, folks. Great job, Scott.
Yep, you too.
Mike Overson, Brad Sanford, Farmers Insurance. Thanks, everybody. Enjoy the weekend. Take care. Nice job, guys. Thanks for so many people joining the whole show. We appreciate that. Mike, you were especially good.
Yeah, thanks.
Yeah, you were. I'm glad you brought that up. I was thinking that's the same thing.
Brad was too. Scott, I'm unsure about you.
Hey, I forgot to say happy birthday to Jen Thompson, my ex-wife. Yesterday was her birthday. We had a lot of fun with her. I won't tell you how old she is, but happy birthday, Jen.
Isn't that nice? He's friends with both his ex-wives.
She turned 35
She
again?
turned 35. Yeah,
Again.
that's why she doesn't. That's why she doesn't want to be married yet.
Brad, good job, buddy.
Thanks.
Yeah, fellow agents, reach out to Brad. There's a reason we work with this guy as well from an insurance standpoint, and Mike Overson, Illuminate Home Loans.